And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway.
Announcements and positions in terms of where we are. And this panel essentially is to go and look at the practicalities, what's happening on the ground. We've got a panel that includes the regulator as well as players in the sector. So we expect that it will be very insightful and very enriching and obviously very interactive, because we look forward to you asking those questions about some of the challenges and opportunities that are available. Without taking up much more time, allow me to call up my esteemed panel. I will begin with Dr. Sibongile Moyo. She's the Vice President of the Bankers Association of Zimbabwe, but also Chief Executive Officer of Nedbank. Please give her a round of applause as she comes up to the podium. Alongside her, we have the Chief Executive Officer of NMB Bank, Mr. Gerald Gore. Please come up, sir. And lastly, we have the regulator, as I made mention of, the Reserve Bank of Zimbabwe Deputy Governor, Dr. Mache. Please give him a round of applause as he comes up to the podium. The format of this panel, I will allow Dr. Mache, as Reserve Bank Deputy Governor, to give us some very brief opening remarks, an overview of the banking sector in Zimbabwe, the regulatory framework, and then thereafter, we'll go into a question and answer session with the panelists, where we're now looking at the practicalities on the ground. What is taking place, what is prevailing, how banks are helping to facilitate trade, and how they can further, what opportunities they see to further do that. So without taking up much more time, Dr. Mache, I hand over to you for some very brief opening remarks, and then we'll get into the question and answer session. Please give him a round of applause as he takes his position.
Good morning, ladies and gentlemen. It is indeed my pleasure this morning to be amongst you. I think that we are going to have a very interesting session this morning. Let me begin by observing all protocols. I normally struggle with protocol, but I want to make sure that we are all covered. So, ladies and gentlemen, all protocols observed. let me begin by saying that the Reserve Bank of Zimbabwe recognizes the important role that monetary policy plays in fostering microeconomic stability and creating a conducive environment for investment and growth. The Reserve Bank has been committed over the last few years to try and stabilize both prices and the exchange rate, but above all, to build upon the nascent currency that was launched last year, to make sure that going forward, we are going to have our own currency as a country, but above all, we are going to foster confidence and trust in the monetary system in this country. Let me say, and maybe I'm preempting some of the questions that people may have. The stability we are seeing now can only be sustained. So the only way from here is up. And what up means is that as we anchor the economy in this stability, we are trying to foster confidence and trust, not only locally, and this is important. We're trying to foster confidence and trust locally and internationally to create an environment where currency is not an issue for business. But in doing so, we would like to build a system that everyone can trust. How do we do that? We do that by sticking to what we say. A year ago, the Reserve Bank announced the new currency and promised that the monetization of government funding will not happen. Okay. So what has happened over the year is that the Reserve Bank has not monetized any of the overdrafts for government, not once. As I speak to you, there has been a zero balance, well, near zero. It's not exactly zero. There are some few tens and, in the positive territory. But the truth of the matter is the monetization of the budget deficit has ceased. Secondly, what that has done, in tandem with greater inflows of foreign currency from exports, from the mining sector, from remittances, from industry, have assured the country of enough foreign currency to meet all the countries, and I want to underline, all the countries' import needs. I would also like to assure not only our partners from the international community and the local market that this country has enough foreign currency for its needs. So, this is built upon by the indicators that we use in the macroeconomic framework. We have noticed that inflation has been stable. We have also noticed that the exchange rate has been stable. However, I would be happier if the movements in the exchange rate will be in tandem to international market conditions. What am I talking about? We all know that most of our reserves are in gold. And therefore, we should see a movement as prices change, not only for gold, but for other minerals as well. So as our position strengthens, given the backbone of our reserves basket, we expect that the exchange rate should also move in tandem with those markets. And we are on the cusp of seeing that happen. What am I talking about? When the US dollars, for those who deal with the financial markets, when the US dollar and other currencies that are from our trading partners weaken, we should see a movement in tandem with that weakness, either upwards or downwards, depending on the basket that we have. So, ladies and gentlemen, this is just a precursor to our discussion this morning. I just wanted to give those three salient points: the stability that we have seen, our commitment to build upon the stability that we are seeing, and a commitment not to let the financing for government budget deficit upset the stability in our financial markets. I thank you.
Thank you very much, Dr. Mache. I'll ask you to return to your seat. Very insightful presentation and certainly setting the scene for this discussion. I will have some follow-up questions to you, but before we get to that, I think obviously a regulator's perspective is different from those who are actually in the trenches, so to speak. And here in her capacity as Vice President of the Bankers Association of Zimbabwe, Dr. Sibongile Moyo, let me ask you to come in. We've heard an overview in terms of the policy thrust for the Reserve Bank. From your view, are you seeing the same? A couple of things I want to specifically ask you on here. Deputy Governor says there is enough foreign currency in the market for our needs. Is there indeed enough FX? But I'll allow you to respond to those issues and also just give us an overview.
Thank you, Farai, and good morning, everyone. Now, I think because I'm here representing a constituency, I have to tell you a bit about ourselves first, to sing for my supper. So the Bankers Association of Zimbabwe is a member-based organization. Our members are 19 banks, 14 of which are commercial banks, most of which are relatively large. We've got about 4 building societies in that grouping and 1 savings bank. Now, as an industry, total deposits that we oversee or look after were the equivalent of $3.3 billion US. Only $3.3 billion US as an entire industry in terms of deposits. This includes 15% of those deposits in domestic currency, or the local currency that Deputy Governor was referring to, which is the ZiG. So 513 million of those deposits, or 15%, are in ZiG, local currency. Then we're lending, we have total loans out in the market of 1.9 billion. So that's already 58% of our deposits are out in loans to private sector in the market. This is outside of lending to government in treasury bills and other instruments. So just lending to private sector is at 1.9 billion of our 3.3 billion in deposits, and it excludes public sector lending. Now, of that lending, 88% is in US dollar once again, matched to our US dollar deposits, and we have 12%, maybe $235 million equivalent of lending in the domestic currency, which is the ZiG. So coming back to a bit of your question indirectly, as an industry, we facilitated in 2024 import payments for foreign goods and services to the value of 9.1 billion US dollars. So this is import payments through formal channels, through the banks that are registered, or the 19 banks that I've mentioned, 9.1 billion in import payments for the depositing market for foreign goods and foreign services. How was this possible? Our deposit level is at 2 billion. We do receive significant flows of foreign currency into the economy. As of 2024, we received a total of 13.3 billion in foreign currency flows into the formal banking system as a country. And where did these come from? They came from export receipts from our exporters. They generated 7.9 billion of that, just exporters of goods and services that we're generating locally. 2.1 billion came from diaspora remittances. I haven't even counted NGO remittances or international agency remittances, which themselves were just over 1 billion. So just diaspora remittances, 2.1 billion. Then we had offshore lines of credit or lending from foreign financiers that contributed 1.5 billion to the forex that came into the country, the 13.3 billion I spoke of. Now, that 1.5 billion in offshore loans and credit from international financiers comes mainly from regional and international banks. A lot of it from regional banks that have subsidiaries in Zimbabwe, a lot of it from DFIs, regional DFI partners, whom we as a country are shareholders in, and some from international partners such as those who you represent, and of course, some private funding from investors with their own projects, whether it's mining projects that come in with their funding from their current country of origin. Important to note on this 1.5 billion in offshore lines of credit that are coming into the market is that the bulk of that, almost $1 billion every year, annually, is offshore lines of credit that we receive specifically for the purchase of green leaf tobacco as a country, right? Most of that, $1 billion of the 1.5, is just targeted at the tobacco industry to buy green leaf tobacco from farmers, and this is against established export markets that have a track record of receivables that we've been confident as regional and international financiers to participate in over the years, a system that has worked for years and years and years and is continuing to grow and build. Now, the balance, of course, would be investments from other lenders into horticulture, into mining, a lot of it also foreign loans from, say, China, from the country of jurisdiction of the said investors. Now, why did I choose to share these particular numbers? I wanted to paint a picture of the capacity of this economy to generate foreign currency via formal banking channels. I've not spoken of what else is out there in the informal sector. This speaks to what is recorded, what is on the balance of payments registers that we have to submit to Reserve Bank daily, and what is actually in our line of sight. So the capacity of this economy and its actors to generate foreign currency denominated income and revenue flows. And how is this possible? Well, this has been achieved because we're in a regulatory environment that is prevailing, that has allowed us as individuals and companies to freely receive and hold our foreign currency income and receipts, whether it's gifts, wherever we've got our foreign currency from, whether remittances. The regulatory environment has allowed us to receive and hold those balances freely without any liquidation or mandatory liquidation, without any mandatory conversion into domestic currency. And so when Dr. Mache speaks of us having enough foreign currency for our needs, we're saying, looking at what is transpiring with informal banking channels, we've received 13 billion in Forex, we've paid out 9.1 billion, we've got deposits in banks, over 2 billion, and things seem to be moving, but this is because we can freely trade and hold our currency, and we're able to, a month or two from now, know that you will have that currency or whatever it is you need to be able to meet your foreign currency obligations. So that would be key to that question. Or
Indeed. A lot of the time in the media, you will see headlines that make reference to liquidity crunch, liquidity shortage. Dr. Sibongile and Gerald, where are those headlines coming from? Is there liquidity crunch from the numbers you're giving? Perhaps not, and that's an exaggeration.
There's a hierarchy going on here. Look, I've already mentioned that the entire market only has 3.3 billion in deposits. That's a very small pool from which to lend. We're already lending 1.9 billion, which is 58%. The other 30% is in regulatory reserves, statutory reserves. That's already 88% of liquidity that's committed. to loans, to regulatory reserves. So we only have 12% of all the deposits in the economy to make daily settlements for client payments. For them to make 9 billion of payments, it means every day we're paying out a huge amount of deposits in the system. So the remaining balance of deposits is meeting daily client settlements, and we've not had challenges with meeting client settlements on time. And this is just the reality in which we operate.
So I can
Yes,
come in there.
please come in.
I think in terms of capacity to lend, I think I want to address that issue. I would say using the statistics you got from Dr. Sibo, there is no capacity to lend long term in this market. And I think because of 3 reasons. The nature of our deposits are largely transitory deposits. More than 70% are current accounts. So these are people who want their money the next day. So you can't transform that into long-term assets. The second reason is the fact that you don't have a deep capital market or bond market where companies can go and raise long-term funding. And then the third is you have a lot of money that is circulating outside the formal banking system. I think individuals have almost become like banks themselves. Probably some hold more money than what we hold in the bank vaults. So that money is effectively not working for the economy because it's sitting outside the formal channel. We can't use it to lend. But having said that, what have we done as an industry to try and solve that problem? 4 things that I'll speak about. The first is access to credit lines. And this is where I think our friends from Europe have been very supportive. Speaking for NMB, we've been able to access money from the likes of European Investment Bank, from Propaco from France, from BII from the UK, FMO from the Netherlands, Swedfund, NoFund, and then a number of multilateral Pan-African institutions like Afrexim, TDB, and AFDB. So those come with sometimes between 5 and 7 year money. So you can actually support customers with their CapEx requirements with that kind of money. So that's number one. The second is you also have these funders. They sometimes come in to fund customers directly. Because of constraints on balance sheets of banks, sometimes they can't give us a lot of money. So they come in and say somebody wants 100 million. They come in and fund them directly. And as banks, we become co-funders with them. So that's the second way we've tried to support the market with long-term funding. The third, I think we've seen pension funds come into the market, especially on the housing side. There's a lot of housing projects that are taking place, and pension funds have been supporting housing development. I mean, for the investors to know that here in Zim, every house that you see was bought by cash. There are no mortgages in this market. So imagine the amount of money that is locked, the amount of capital that can be unlocked if we start offering mortgages. And this money can then be used to support businesses. And then the fourth and final is there's something that we call value chain financing, which we've also been practicing in the sector, and it has worked on agriculture and also horticulture, where we identify a value chain and all the active players within that chain, and then we come in as a trusted party. So sometimes you are not giving people money, but you are providing risk mitigation instruments like guarantees. So some of what they need is not necessarily money. Maybe it's access to markets. Maybe it's access to input. So we come in now as a trusted party to allow them to access the things that they want without giving them money directly. Thank you.
Fantastic. Before I come to you, Deputy Governor, I just want to speak again very quickly to the 2 bankers here. Obviously, we know that the impediment still remains of the unavailability of some correspondent banking relationships. How much, when we're in a forum like this, what sort of assistance or support or facilitation do you think can be played by partners like the EU in unlocking that and the value that it would create in the market?
Yeah, correspondent banking relationships have been a challenge for this market. I think we saw the problem, I think in 2015, that's when we had a number of these banks de-risking out of Zim. So it becomes difficult, especially for dollar clearance. And we've had support from some banks out of Europe, but always, I mean, they're changing their risk profiling. And sometimes you get a message that, look, we've made a decision to de-risk out of Zim, and so we can't continue supporting you. So our appeal is, I think if we can unlock that, it helps to smoothen trade, even for the companies that would make decisions to invest in Zim. At the end of the day, you also want to repatriate dividends, interest, and you need those correspondent banks in order to support those flows. So definitely it's a challenge, and we would really appreciate any assistance in that regard.
Dr. Mache, I'd like to come back to you. In your presentation, you did mention stability of the currency, the ZiG, and indeed that has been acknowledged. However, certainly I will say to some of the people that I speak to in business, whether they're analysts, wherever it is, there's almost a sense of apprehension or anxiety, feeling that, you know what, this stability may not hold, and at any time we might see things unraveling. I'll make mention of the fact that a lot of people make mention of once contractors are paid, we'll see the rate run and things like that. I'd love to hear your response to that.
Thank you very much. The first thing that I wanted to mention is the question you asked earlier about whether or not we are in a liquidity crunch. Sometime towards the end of the year, the Reserve Bank came out very clearly that this economy is not facing a liquidity crunch. I think some of the misconceptions about the liquidity crunch is a lack of detail. As the transacting public, it is important to understand that when the market is long, right, there is enough liquidity in the system. However, there may be glitches in the distribution of that liquidity in the financial services sector. So what we are seeing is, or what people are referring to as a liquidity crunch, is the uneven distribution of that liquidity within the system. And the Reserve Bank has been working very tirelessly to try and find ways and instruments to distribute that liquidity, including through intraday facilities, the TFF, the Targeted Finance Facility, and I'm sure that all critical financing to the productive sector has been covered and is going to be covered going forward. Currently, the total amount of ZiG deposits is about 16.9 billion, representing 18% of the total money supply in the economy. However, I normally expect the question you've asked just now. I want to distinguish between perception and reality. We've been stable as an economy over the last, let me say, 8 months, okay? Our currency has been stable. Our exchange rate has been stable. Inflation has been stable. Off the record, let me say something. I hope it remains in this room. We cannot, I was joking with Gerald earlier, saying, you know, you can't get into a marriage expecting to be divorced. That marriage won't last. As economic agents, now we can open the doors. As economic agents, we need to understand that you cannot succeed in business if you are always expecting that you will fail. Let's build upon the success that we have seen to expect the best, or to be positive. The Reserve Bank has been committed to ensuring ZiG stability, and that anchors everything else. Because that anchors your exchange rate stability and so on. The obtaining exchange rate stability will be sustained in the medium term, supported by strong liquidity and money supply management and increased inflow of foreign currency. Now, somebody asks, the question you've asked about contractors. Let me make it very clear. There is no pressure on the exchange rate coming from government payments. Zero. Government is actually making some payments to contractors in line with its revenue inflows, because the ministry has been very clear. It is going to pay what it can afford to pay. As it raises revenue, it will pay. So contractors need to be assured that the payment will come and are coming. Now, these payments have to be synchronized to the desired liquidity to support the stability that we've been talking about. The system is one system. There is no Ministry of Finance doing its own thing and the Reserve Bank doing its own thing. We work in tandem and in full transparency with the other economic agents that government regulates. Lastly, it is important to note that government has not made recourse to the central bank in 2025. I've mentioned this before, and I want to emphasize it. The Reserve Bank expects to continue along this line. Why do I have confidence that this will happen? As you all know in this room, we are in the middle of final phases of negotiating an SMP. This program needs us to be disciplined and to maintain the stability that we are seeing. And from the Reserve Bank's end, the assurance is there is no liquidity crunch.
Indeed, thank you so much, Dr. Mache. Dr. Moyo, from where you're sitting, I mean, you mentioned the significant foreign credit lines that come into this market. From the sentiment that you get from these people who are pouring in funds, what is their view on the ZiG, but also the prospect of reverting back to a monocurrency, perhaps even ahead of the 2030, as we've heard being mentioned?
Moderator, can I say something before she steps in? I just wanted, before they take down the table up there, I just wanted to reiterate the point of financial deepening. It is crucial that this economy starts to look towards deepening our financial markets. And efforts are ongoing in this track. I wanted to especially point to the second line. As you can see, that mineral exports contributed $5.8 billion last year. What it means is partly that we need capital investments in mining. Our markets are not able to provide enough capital to cover the capital needs of the mining sector. So the lines of credit, investment into the mining sector is key to us expanding that line, which contributes pretty much 40–50% of our total foreign currency revenues. Thank you.
Thank you, Doc. Over to you, Dr. Moyo.
Yeah, thanks again. So, look, the current legislation we have in place has given us until 31 December in 2030 to revert to monocurrency or any other format going forward. So as industry, those are the timelines in which we work in terms of our planning. So we're not expecting any differently, and we are always able to engage with regulators in terms of the expectation and the current planning horizon. Now, the sentiment of industry is around the very issue I mentioned earlier, which is to say, we have not had challenges with being able to keep whatever currency of income and deposits that we have. We've not had challenges of mandatory liquidation of foreign currencies. But what then comes to mind as we drift towards monocurrency is to say there is a sentiment of apprehension, because the question is, given our heavy dependence as an economy on exports and foreign receipts, the 13.3 billion, and given our heavy dependence as an economy on imports, the 9 billion and growing, what will that mean when we move to monocurrency? What will that mean for banks, our role as financial intermediation agents? So for example, the $1.9 billion, which is mostly US dollars in loans that we're giving out to the market, will we have a 1.9 billion US dollar equivalent in ZIG loans to replace that credit or that funding gap? Those are the questions that concern us. And remember, as we go to monocurrency, we will still have that 13 billion of exports. It will still come into the country, whether we operate only in ZIG within the domestic currency. The ability to retain those levels and grow those levels of foreign business, which will always be there, and in banks, we keep these flows, we see these flows. Maybe outside the banks themselves, you may not be able to transact in a foreign currency, but these flows still come to banks because it's still part of our real economy and it's still part of how the system operates. So the question then becomes, when this money comes in, when we move to monocurrency, does that mean that on day one, every single cent I receive will then be converted to local currency? And then will I be able to instantly purchase my foreign currency back on day two to run my business, to make the imports and to carry on trading? So as banks in particular, we would like to see what the plan is to monetize the 3.3 billion in deposits that are currently mostly US dollar deposits to ZIG, if that is the plan, because we currently only have just over 500 million in ZIG deposits. So we need to 5.4x the current ZIG deposit levels to replace the US dollar levels. Yes, we've seen a drift or a drive towards that through the reserve accumulation to back all the ZIG equivalent deposits we have, which are over 500 million. I think the reserves are well above 600 million, which probably is 1 month import cover. So we need to 5 to 6x that to replace the US dollar deposit. And of course, if we have reserves, in theory, we can then get the foreign currency equivalent as and when we need it. So those will be the main issues. And in terms of foreign investors and offshore lines of credit, the real export economy is there. For as long as you're funding an export enterprise, there is foreign currency that comes through those channels that can retire foreign currency inflows. As you can see, offshore loans are only at 1.5 billion. I mentioned the 1 billion is mostly in tobacco. That has been going on for more than 30 years, during which we didn't have a dollarized economy, and money came in and lines were repaid efficiently. So it's really now a question of how do we continue to intermediate as financial institutions? How do we replace the current US dollar balance sheet on the domestic deposit and lending and trading front?
Fantastic. Gerald, do you want to chip in?
Thank you, Farai. So just to weigh in, I think April, the Reserve Bank issued guidance to the market in terms of this transition to monocurrency, where the date was put as the 1st of January 2031. So for me, I think talking to investors and providers of lines of credit, for starters, the level of clarity is important. I think just the fact that you have clarity on the matter is half the story, because it helps people to manage the risk. What you don't want is a situation that's not clear or people start to speculate about it. So the level of clarity is important. And then for me personally, I don't think the debate is really the debate on whether we need our own currency or not, I don't think it's a debate, because eventually every country requires their own currency. The issue has really been on stability of the currency and whether people can use it as a basis to serve. And if I listening to the Deputy Governor, the commitments that he has made, which I think commitments the Governor has repeated, that between now and the date of the transition, they will make sure that the currency is stable, where at some point people must be indifferent between holding local currency and US dollars. Now, once you achieve that, then it is no debate in whether you need your own currency or not. So I think it's really working towards this stability. And judging by the last 8 months, we have seen stability on the exchange rate. We have also seen an increase in access of foreign currency on the official markets. And I think if that continues, I don't think it will be a debate on whether you need a currency or not. It's really the stability and the confidence.
Thank you. I'll stay with you, Gerald. One of the key concerns for people wanting to do business in Zimbabwe, invest here, is issues, again, tied to currency, but around repatriation of their funds, how they register, how they bring in their funds and all that. And I know yesterday on one of the panels, Mr. Vumbe from the Ministry of Finance made mention to the fact that, yes, these guidelines are in place and it can happen. Practically, on the ground as intermediaries, is this happening seamlessly? And perhaps walk us through the process that someone who has their funds needs to take to bring in the money, and when they are then seeking to repatriate it, how that goes.
Thank you, Farai. So as banks, we act as intermediaries, but we also have an advisory role to foreign investors. So we, as authorized dealers, are the ones who talk to Reserve Bank, exchange control. So all whether it's foreign investments or lines of credit, they have to be registered by Reserve Bank, exchange control. So we do the legwork to facilitate that registration. Now and then on top of that, we also help companies to open accounts. And since we're in a multi-currency, you can open accounts or 9 currencies, so to speak, including the US dollar. So we facilitate that process. Now, once the investment is registered, at the point where you want to repatriate, whether it's dividends, interest, or the actual disinvestment, if you decide to disinvest, we do facilitate those remittances. And so far, I can confirm that it has been working smoothly. People, investors, we ourselves have got partly foreign shareholders. We've been able to pay dividends to them without any problems. And we also facilitate dividend payments for other foreign investors. So I can confirm that the process has been working.
I know that obviously there are a lot of questions in the audience and we want to have that interaction. Allow me to just ask one final question to the Deputy Governor before I hand over to members of the conference here to also engage. Deputy Governor, I like the fact that you pointed out export proceeds. You made mention of the mining sector. Obviously one of the most impacted by the question I'm asking about. It's been a long-running theme that we've heard exporters talking about the retention thresholds and saying that they would like them reviewed. Those calls, though, seem to be falling on deaf ears. Do you disagree with exporters that the current levels are unfavorable? And perhaps speak to why there's been apparently this hard line to maintain them or even increase the retention thresholds.
Okay, so firstly, note that all these, the previous question and this one, are interlinked. The one thing that you need to realize is that, and it's a key for investors, you need to register your investment. Because we've seen a situation where an investor comes, they haven't registered the investment either through ZIDA or through the local banks, and somehow they have an investment. Then they try to remit their dividends or even loan repayments. It is important that these investments be registered. And as the banks have just said, once that is done, there is absolutely no issue in remitting profits, dividends, disinvestments, no problem. So I wanted to emphasize that.
Very important. Thank you for that.
The issue of deaf ears, the authorities are not really maintaining a hardline stance. We talked about, monocurrency and the roadmap towards monocurrency. It is the monetary authority's view that this transition needs to be seamless. It shouldn't be an event. It should be a process. And the idea is that you wake up on January 1, 2031, no disruption should happen. So the idea is to slowly transition, and part of that transition is surrender requirements. The adjustments have to be done slowly so that there is an environment that evolves. Now, export surrender requirements themselves are critical for redistributing foreign currency in this multi-currency environment, so that there is an assurance of availability of foreign currency for critical imports. It is key that we realize that some of these imports are needed in sectors that don't generate foreign currency. And therefore, there is a need for that redistribution to happen. But on top of that, there is the transition that I'm talking about. So you don't want to wake up from 25% surrender requirement to 100% overnight. It disrupts processes, it disrupts businesses, it doesn't benefit anyone. At 30% surrender requirements are in line with the proportion of ZIG transactions in the economy. And it is these proportions that we use to adjust surrender requirements. As the proportion of ZIG increases, so will the adjustments of surrender requirements. We know economies across the region, across the world, that use their own currency. There is not going to be a glitch in exporters receiving true value for their exports by moving to monocurrency. That is an assurance that the central bank will continue to give to the market. So I don't see the central being deaf here, the central bank being deaf here. I see the central bank responding to the needs of the economy and to the processes that we need to go through in transitioning to monocurrency.
Thank you very much, Dr. Mache. As I mentioned, I would obviously like to interact and get some questions coming through. I can see one hand has already shot up in the front. If we could get those roving mics. The first hand is here, the ambassador, and I see a few hands. We'll take possibly 3 questions, if we could just make them as succinct as possible so we can take as many questions as we can. Over to you, Ambassador.
Well, thanks a lot for a fantastic panel. Very, very interesting. I have actually 2 questions. The first one is on the surrender requirement. I can entirely follow the logic of a surrender requirement, but only if the value you are getting in the local currency corresponds entirely to the value you would have had in dollar. Now, currently, we still have, even after the repeal of Statutory Instrument 81, we still have quite a significant difference. So companies being subject to a surrender requirement basically lose up to 20% of their margin. That's a problem. And what are you planning to do to get rid of that? Second one is on capital. I hear you on capital is an issue, but I believe it's not only in the mining sector. And if you look at any successful economy in the world, the accessibility to capital is a key requirement to success. So what's in the pipeline to say how can we get capital in that market so that companies can take up loans and have capital? Thank you.
Great. Ambassador Mtwangwa, did you want to very quickly as well? You want to get him? We'll take Ambassador Mtwangwa, then come to Dr. Chanakira, then we'll allow responses to that.
I would like just additional clarity. You mentioned the money in circulation, which is in US dollars. About 80% of all the money in circulation in Zimbabwe is US dollars. The reality is that America does not give US dollars for free, even to its own population. So clearly, that money is earned by Zimbabweans. It is their money. And this is an important aspect of why there is sound monetary management at the Reserve Bank. It means that our people are working very hard to earn US dollars. And this is an important bearing to investors outside. In addition to the fact that all houses and all cars are fully paid for. We are the most under-borrowed country in the whole world. And we have a very middle-class economy in Zimbabwe. And just to add is that the gold factor in terms of the availability of currency, Zimbabwe's gold production keeps rising. And gold has been better money for 5,000 years, better than the US dollars. So these are some of the realities which our European friends need to bear in mind when they talk of risk analysis to Zimbabwe. If you don't consider that, you will come when the risk is gone and you will not have a profit afterwards. I thank you.
Thank you, Ambassador Mtwangwa. We'll now hand over to Dr. Nigel Chanakira. I remember a famous exchange they once had, these two gentlemen in Victoria Falls, but just coincidental that they happen to be in the same room and speaking after each other.
Speak on the tail end of what Ambassador Mtwangwa said. But I think a fundamental issue that we need to consider, this is a suggestion, Deputy Governor, the sense that we need capital, deeper capital markets, as both Gerald and Dr. Sibongile mentioned. I think it lends to the fact that we need infrastructure expenditure, which is medium to long-term funding. And this is where our European partners could help us, perhaps. We also need capital for the equipment, as was indicated. And I think the apprehension that we saw when we had a deadline prior to this new deadline that we have meant that the banks automatically stop lending. And that's disruptive. That's the reality that we experienced when we had the last 5-year deadline in terms of converting to a local currency. I think the key issue is to allow for capital markets to have an extension as long as they want, 10, 15 years, because that's the normal period for capital flows. So if we are moving to a declining maturity period, I mean, lending will naturally decline because the banks are apprehensive. Any exporter who is borrowing is also going to be apprehensive about whether he can fulfill his obligations. And therefore, my humble submission is that the bankers and the Reserve Bank should perhaps allow the private sector to benefit from extending specific allocations that are, or funding that comes for infrastructure development. We need power, we need roads. Any infrastructure capital that comes into Zimbabwe should therefore go beyond the 31st of December 2030. Otherwise, we're going to get into a bind.
Thank you so much. We'll leave it there. We'll allow, thank you so much for all the questions. We'll allow the panel to respond. I'll begin with the Dr. Sibongile Moyo, if you can quickly respond, and then we'll take another round of questions.
Yeah, thank you. And a lot of great insights and questions from the audience. So on the capital and funding issue, there's a huge gap. And part of the gap is because of the infrastructure funding gap. You know, our neighbors are currently benefiting from hundreds of millions, billions of funding from multilateral lenders and from other bilateral international lenders, which we currently don't have access to. Of course, there's a process in place, arrears clearance. Hopefully, I don't know if it's going to be the catalyst, but essentially, for as long as we're not able to access the same funding that our neighbors are accessing, 15-year, 30-year loans at single-digit interest rates, because of that integration to international capital markets, it's not going to work. None of those economies are funding any of those needs from local capital markets. It just doesn't work. Then in terms of at the micro level, corporate level, there are many funding options. Gerald did mention some of them. Equipment and plant. In the 80s and 90s, we had a very vibrant capital lease or asset equipment lease financing system, working with international partners. And this is where yourselves as Europeans, I know we do a lot with South African export credit agents and other similar agents that provide guarantees and risk insurance, not just covering commercial risk, political risk insurance, to enable capital equipment to come into the country, whether on a lease basis, money can be repatriated out. So this is the way in which we can expand the capital markets. Western world, the economies were built on capital leases, on lease and asset finance. Nobody could ever buy billions of equipment using cash. So we need to unlock those markets, which is an easy, quick win, because it only requires your own export credit agencies to facilitate export of those goods coming from your markets. And then it only requires banks to commit to the repatriation. And of course, if we're able to get extended dollar lending or loan repayment through Reserve Bank for offshore loans that have longer tenures, for sure that helps. But we've always had those arrangements. Even during monocurrency or multiple currency, we have always had arrangements where any foreign loans, whether short-term or long-term, that were booked and registered could always be settled and paid over long tenures, regardless of the domestic currency that was prevailing.
Dr. Mache?
So there was a question on the loss of value of surrender requirements. Ambassador, let me assure you that what we're trying to do is to make sure that our markets work. This is why we are at pains to assure the markets that the exchange rate that you see in the market is the ruling exchange rate. If it is the ruling exchange rate, then there is no loss of value. Okay. We have seen the parallel market premium narrow. So it's a process, Ambassador. Once we get it, under 10%, and right now it's around 20 or so percent. And it's drifting downwards all the time. So the idea is to put in measures to really narrow it down as much as is possible, so that whether or not you surrender, you don't lose value. So efforts towards that are really, really being given priority. And I'm hopeful that we may get there sooner rather than later. In fact, I think that as the inflation, normalizes, when I say normalize, is we're thinking of a month-on-month which is below 3%. And I think that we are there now, but it's because it's transitory. We think that by the end of the year, annual inflation will be less than 30%. My projections are lower, but they say I'm crazy, so I will stick to the official line. The second issue that we are seeing around capital markets, I gave an example of gold and why it is almost impossible for the local financial markets to finance capital for mining, particularly for these large exports like gold, platinum, and so on. So the idea that that the market should expect is that as we enhance the functions of our structures in the financial markets. So for example, the functioning of the VFX, the stock exchange, when things normalize, all of this will start getting liquidity in the market. But it's a process. It won't happen overnight. But we are seeing the uptick in both stock markets. And we hope that making the Victoria Falls Stock Exchange International Financial Center will help in generating a lot of activity around investment for capital. Now, 2030. Nigel, you are so right. But think about it this way. I think what you've said is absolutely sensible. But the problem is, we don't want the financial services sector to fight with one hand tied behind their back. The idea is everybody should expect that we are going there, okay? And the assurance on the other side is whether or not you invest in infrastructure or whatever sector, when you want to remit, you will get your foreign currency. So it doesn't matter whether you have invested for 10 years, 15 years, 20, 50, 30, you will get your money. This is why we discussed earlier on about the assurance of investors to get back the returns for their investment, disinvestment, equity back and forth. Because you see, once you start making exceptions, what happens is that even there will be confidence issues. We want to build confidence in the system that we are putting in place. And this system has been functioning. We need to get to where it was functioning before. And Slongile just explained to you that we used to have these things. So it's just rebuilding that. But crucially, we need to give assurances that any form of transfer of funds will be honored in the currency that is preferred by the investor.
I'm looking at Ruveneko with those puppy dog eyes, asking for just a few more minutes to have a few more questions. Since the mic is not working,
right.
I will.
My mic is working now. It's working. All right. Look, I think we're all adults here. And I think when we have such conversations and such panels, it's important to make sure that we get what we came for. And I'm pretty sure it wasn't for good coffee only. So my question to you, by a show of hands, should we continue and eat into our tea break? Show of hands? Yes? All right. And I'm led by the people. Over to you. I'm gone.
All right. So the mic, I think there were a couple of hands here, but I also realized that we've gravitated a lot this side of the room. So let's take one from the middle, and then if you could come and take a couple from this side. Yes.
Lou?
Thank you so much. A very, very good morning. My name is Margaret Verwijk. I'm the ambassador of the Netherlands. And I really, really appreciate this panel and the insights provided. I have two things. Trust. And I want to refer also to the neighbors and access to finance. We talked a little about FMO, the Dutch Development Bank, that is really, really willing to invest in efforts, initiatives in Zimbabwe. However, things are blocked because of legacy debts. And we're only talking about 7, 8 million, something that could be resolved easily. And together with Gerald, Gore, and MB, I'm trying very, very hard to push because it will enable access to new finance. So what is the process in place? It's not happening. So this is one. Second thing, I'm not an economist, but if I go to any supermarket in Zimbabwe, I don't see any ZIGs. Since the introduction of the ZIG, I haven't seen a single one. I haven't touched one. Where are they? On top of that, when I pay in US dollars, I get in return a Panadol. This is worrying me.
Thank you very much. You can, there's a gentleman right behind you. If you can, yeah.
Morning, everybody. Yeah. All right. My comment or question is directed to the bankers.
Sorry, the mic.
Ex-banker, retired. My question is directed to the Bankers Association and NMB. I did a bit of research on low uptake of offshore loans by local companies. And some of the findings were that there are high processing costs as well as delays in processing those loans. Maybe the second comment is directed to the governor to say what efforts are being done to account for US dollars or whatever foreign currencies which are lying in safe deposit boxes. Thank you.
All right, just to make this as quick as possible, we will take, okay, go ahead.
Good morning. My name is Victor Uteni. I'm the chairman of the Zimbabwe Independent Power Producers Association. We are a grouping of IPPs that are producing power in the country. We've invested in excess of $400 million with a growing pipeline of projects, evidenced by signed long-term term sheets, loan agreements that are due to close but have not closed. The reason for that is the arrangements for the opening of offshore bank accounts. Directly to the Deputy Governor. Some of the banks are asking for direct payments to clients into offshore held accounts. When we engage with there's a requirement, for example, that the money is remitted into a local bank account, for example, to Gerald, and then it is paid to the offshore account for debt service. Now, trust and confidence is built over time. And I just want to reinforce what the ambassador just said, because yesterday, even during the course of this conference, we had a meeting with the FMO. The first thing they said to us was, but we've got blocked funds in Zimbabwe. We're very keen to invest. We've got long-term term sheets. I'm talking as a body, sitting at close to almost $400 to $500 million. And all the financiers are saying, we want direct payments from your customers into offshore held accounts. And the monetary authorities are saying, no, but pay it into a local bank and then we remit it. That introduces what we call, and I know the Deputy Governor is very much aware of it, remittance risk, not convertibility. Trust is earned over time. We would think that the monetary authorities should be ambivalent about this. because you are assuring us that at the end of the day, you will remit that money. That assurance is good to us. But we need to earn that trust with banks that have been not participating in our country for a very long time. I think I've made my point. Thank you very much.
Thank you very much.
Good morning. My name is Shaunopa Gambiza. I'm the GM of a South African IT company. We're looking to come into the country. My question is to the Deputy Governor. He used a technical acronym there, SMP status, very short one. I just wanted to understand what does that mean and what are the implications? Thank you.
Great. Go ahead, sir, and that'll be our final contribution purely because of time.
Thank you so much. So I've got two questions. My name is Henry Mnangatira. I'm in finance. First question is, there are many other options in terms of raising capital, such as sustainable bonds, green bonds, and etc. What do we have from a policy and institutional perspective to support that? Second question is about, I think the ambassador from Netherlands mentioned about legacy debt. I was in Italy trying to do some business, and we couldn't get financing from SACE, the Italian Export-Import Bank, because there was a debt for like $12 million that had been accrued by some Zimbabwean company or government entity or so forth. And right now, if you go to the Zimbabwean embassy in Rome, they can't facilitate any business with Italian companies. They've got a whole list of companies want to do business, but they can't just because of this basically not really significant amount of debt. Why can't we clear such debts so that we can facilitate for Zimbabweans like myself and others to be able to do business with our Italian counterparts? And the second one, like the first one, about how do we structure innovative financial instruments, especially such as bonds? Is there a way that we can do it and that the government can support us? Thank you.
Thank you very much. I'll now hand over to the panel to respond. Gerald, I think you can go first.
Okay, I wanted to respond on the issue of delays. So firstly, for foreign credit lines, the bulk of those lines are going to support exporters. And for obvious reasons, because with exporters, they give you the guarantee that when you need to repay, because they have to be paid in foreign currency, when you need to repay, they will generate the necessary forex to do that. But the process itself is a long process. I think from the due diligence processes that you go through, sometimes it can take anything up to 1 year, to actually get a line over the line. And by that time, I think you would have generated a pipeline. You have told a customer that, look, we're negotiating this line, and there are these processes that we are going through. So I think that's where maybe the delays are coming from, because the process by nature is a long process. Costs, I think they are way cheaper when you compare to local funding. So that I can confirm. We have lines that we have given at sub 10%, which is quite rare in this market. So I think on cost, I think they're quite reasonable. Thank you.
All right, Dr. Mache.
Okay, so trust. I think here trust is really being driven by long overdue settlement of obligations. As you know, the Reserve Bank has transferred all quasi-physical operations to Treasury. So I heard that FMO was here yesterday. They deal with all of the block funds. So it's not really a Reserve Bank function anymore. However, on the block funds, the assurance that when the equivalent is available from Treasury, those will be given priority for the FX they need to settle this. And this is almost the same answer with my brother over there. Why is the country embarked on this course? Because if you look carefully at these funds, they were borrowed for use not by the central bank, but by the country. So they become an obligation of the country. And efforts through the structured dialogue platform are really underway. I mean, you can't imagine. You know, we had a meeting just a month ago, actually less than a month ago. We're going to have another one at AFDB next week to try and push the process of settling some of these insignificant amounts. And the idea is to settle these insignificant amounts as quickly as possible. So you will appreciate that, of course, there is an issue of the farmers that has gone on for so long. And the prioritization there is the issue. And we need to look at how quickly we can get to a concrete prioritization of these. But I would, in my non-policy hat, I would imagine that the first thing is to deal with the insignificant small amounts. And then, of course, you know, government will have its priorities given the relationships that they want to cultivate to move very quickly. So there was an issue. So, you know, Ambassador, I'm sorry I can't give you a straight answer, but the straight answer is it's within block funds, and the prioritization is being worked out through the structured dialogue platform. The second issue is on safe deposit boxes. What is the, oh, no. There was an issue of ZIG. Where is the ZIG?
Where is the ZIG? Yes.
The ZIG is there in the system. So I talked earlier about ZIG liquidity. And I think the bankers gave us numbers here. And I can give you a whole table of how much ZIG is there. There is about 16.9 billion ZIG in the system. Now, as you know, given where we are coming from, what has happened is that the market has become more digital than physical. But of course, the issue of change is a very big issue. And the idea is we advance digital payments. And I was talking earlier in the morning about digital public infrastructure. That's where the world is going. The world is going digital. So even as we continue to adjust optimum liquidity in the system, we also need to start thinking of the different payment systems that we want to encourage in the country. And going digital is the way to go. I've talked about how we can do that, and digital identity is key to where we are going. And that platform is slowly being built. You will find that in countries that have developed fast payment systems, this is the way in which we can make transacting easier, faster, and just like cash. But only you need a simple device. Safe deposit boxes. So what's being done? What's being done is to encourage, through financial intermediation, to get economic agents, yourselves, the public, to work towards gaining confidence in using the money that is sitting in safe deposit boxes and not making any money. Let me give you an example. There was an announcement a couple of weeks ago that the Reserve Bank has restarted selling gold coins. Anybody who bought gold coins here in this room, when they were launched, got an incredible return for their investment. Incredible. Compare it with somebody who was sitting on his money in the bank. What did you do? You lost almost, 100% of value by just keeping money in your bank. The idea is to make people through various means, incentives and otherwise, but to explain to people that your money is better working for you, not sitting under your pillow or in a safe deposit box. But it doesn't work to use draconian attempts to encourage people. We need to build an incentive structure and information provision to make sure people make sound financial decisions. The requirement of a local bank is key. You see, remember I talked about registration. Now, and the banks are the ones that do all this intermediation. It's not through the central bank, right? So to have a direct payment without involving the local bank would be difficult. So you need to be provided going forward with the foreign currency that you need. So if the Reserve Bank doesn't see what agreements are in place, how do they make sure that there is enough foreign currency for you to remit going forward? So using the banking system is the only way to go. But if there are issues of time that we can deal with, I think it can be done. Lastly, what is SMP? SMP is a staff monitored program of the IMF. The idea here is to build a track record within our counterparts that we are disciplined enough to run this economy based on market principles without draconian, unwarranted intervention.
Thank
That
you.
is the SMP.
Thank you very much, Dr. Mache. Unfortunately, because of time, we must end the discussion here, but we'll have one final response from Dr. Moyo, specifically on the issue of bonds.
Thanks again, Farai. So, look, we do have a lot of discussions on bonds, all sorts of bonds, all nature of bonds, green bonds, social bonds, and there are some bonds that have been issued in the market. But we're back to the same challenge of the capital raise or subscription of those bonds is dependent on the local capital markets and the availability of funding within the local market, and we're still talking of that same 3 billion liquid, the same, dog chasing tail. So the challenge that we have here is to say, how do we make our bonds being issued by local entities attractive to other sources of capital for subscription, to the external markets? How do we enhance those bonds through guarantees from our partners? But then, of course, it brings us, I think, to what I would say is a closing remark that we can adopt here. The issue of the legacy debt overhang. It's an albatross, how we address it for the sake of progress, because all of this, even enhancement guarantees for bonds to bring in international investors, are hinged on that trust issue and because of the legacy debt that is still hanging. Yes, we've tried to reset. We've tried to reset in the last few years. We're now matching assets and liabilities going forward. But we do need to deal with that albatross in terms of unlocking, more financing solutions and unlocking all the issues that have been discussed here today.
Ladies and gentlemen, I think we can thank our panel and our moderator for an enthralling discussion. Thank you so much. Informative. Thank you for being so gracious and giving us more time. Deputy Governor, can we offer you some water, some panado? Are you all right there? I know you're on the chopping block a lot. Maybe a shot of tequila. I don't know. All right. Thank you so much. And these mics. Thank you very much to you as well, Mr. Gore. Or from the ambassador from the Netherlands, your new name is Mr. Gore. Thank you as well, Sibongile. Thank you so much. All right, pleasure. Thank you, you too. All right, ladies and gentlemen, it was your vote. You asked for more time and you got it. But now we're just going to press you a little bit with your tea break. So please make it swift. Mayimba will be there to tell you exactly when to shuffle back in. And then regarding where you parked, if you don't want to be clamped, I'd encourage everyone just to give me 1 second to call out the number plate of a car that is apparently about to be clamped. AFZ 1765. AFZ 1765. There's nothing worse, all right? So please attend to your vehicle. Enjoy the tea break. Thank you.
And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway.